Good morning. We're here to study SMOD, and we'll start by a brief technical analysis. This is the all history chart going back to the company's IPO in March 2006. The stock entered the market at about 8.5. It is trading at 13.38 now, above the 200 days and the 50 days moving average. So long term, moderately bullish. Over the short term, we have this ascending trend line here acting as support, and the all-time high was 14.68. It looks like it will approach the all-time high, but we really need the fundamental tests to know where this stock is going over the long term, and that's what interests me. So, fundamental analysis. This is the share count since 2004, and now we have about 59.8 million shares outstanding, so the market cap is $800 million. And I calculated the increase in share count from the previous quarter and then extrapolated it to a full year and got a share count compound annual growth rate of 4%. So the dilution factor for my model, that's the first estimate I need to make, it will be 1.04. So I made this from quarterly information, and the market cap is growing since 2005 at a 36.7% level. Well, but the company was not publicly traded here, so this is not very important information. Let's move on to study the balance sheet. Here we have long-term debt and current ratio. Long-term debt now is $81 million. It was the same in 2006, but declining from $125 million in 2005. And this is the current ratio, which was low, below 2, but now just a bit above over 2. So the balance sheet is improving, but still not very strong, not very weak either. Receivables account for 51% of the total current assets, and the inventory is 20.4%. So really not a very strong balance sheet. I'll stay with that 1.04 dilution factor. As for revenues, we have it here since 2004. Not much growth, you see. In 2006, revenues were lower than in 2004. 707 million in 2006 and 893 million in 2004. Expected for 2007 are 963 million, and for 2008 $1.05 billion in revenues. As for gross margin, it has remained here between 15% and 20%. Expected for 2007 we have 17.2%, and for 2008 the same. So revenue, since this is not 2003, I'm sorry, I believe it is since 2006 till expected for 2008. We have a 20% compound annual growth rate, and the industry grew 21.5% since 2005 levels. Gross margin 17.2% for our company and 42.7% for our industry. So this is a low margin business, at least now. Price to sales ratio, it is 0.83 for SMOD, and for the industry average it is much higher at 2.56. So the price to sales ratio reflects the lower gross margin for our company. As for earnings per share and net profit margin, the company lost 51 cents per share in 2004. Profit of 49 cents in 2005, 55 cents in 2006, expected for 2007, 91 cents, and for 2008, $1.06 earnings per share. As for the net profit margin, it was negative here, and then 2005 4.31%, 2006 4.57%, 2007 over the past two quarters we had 5.5%, and expected for 2008 6%. So earnings per share since 2005 until 2008 expected are growing 29% a year. Net profit margin it was 5.5% in 2007. It has been 2007 is not over yet. We still have 2 quarters to go on a fiscal basis. Price to earnings ratio, considering 2007 estimates, is 14.7 for SMOD and 26.1 for the industry average. So again, the stock is trading at below average multiple, but it also seems it is a lower than average net profit margin business. So on my valuation model, these yellow lines are known facts. The initial share price, which is the current share price, the initial share count 59.76 million, initial revenue, it was 2006 fiscal revenues of 707 million, and the initial net profit margin 5.5%, which was the 2006 net profit margin. These orange lines are calculated automatically by the model, so I just have to estimate these 4 white lines. The dilution factor, as we've talked previously, is 1.04. Revenue compound annual growth rate expected is 1.2. That means 20%. That has been the recent historical growth rate. Final net profit margin estimate 6%, and earnings per share multiple estimates 20. And this gives me a share price, an estimated share price compound annual growth rate of 17.7%. I'm looking for at least 16%. If it goes below that, I'm not interested in the stock anymore. So this is just barely attractive. And the optimal selling price today is 13.98. The stock closed at 13.38, so I don't see much gain here. Well, I see it, but not really above the market average. The market average is 8%. I look for at least double that, 16%. If it goes below 16%, I'm not interested. According to these estimates, it will go below 16% when the stock reaches 13.98. So, very attractive. My rating on a 1 to 10 scale is 7. Thank you, bye. Oh, sorry, not this.